So it is officially 3 o'clock. We have, how many people do we have on now? We have 88 participants, which is not bad. The number will climb. We have a lot more registered for this class. So with that, I would like to introduce Justin Bush. He was with Cardinal Financial. He is the sponsor of this class today. Justin, thank you so much for being a sponsor. And go ahead, the floor is yours, man.
Hey, thanks guys for having me. Real quick, I am the market leader for Cardinal Financial. We primarily focus on what is central down through South Florida. We are a 50-state direct GSE lender, so that means that we are direct to Fannie Mae, Freddie Mac. And I did ask that Kevin pull me at some point down the road, because I think that there are a lot of opportunities when it comes to short sales, especially from the realtor standpoint of how to compete with those cash buyers. When it comes to the mortgage, having that buyer or borrower that's going to need to get a mortgage to maybe, beat that offer price of a cash deal. So I'm here to help, and I do have a lot of experience in this historically. So I'm excited that I'm here. Thanks for having me.
Of course, tell us a little bit about some of the new features and packages that you have at Cardinal Financial right now during this entire COVID-19 pandemic.
Well, I think that one of the biggest things that we're going to see is that there are going to be a lot of people that have gone into forbearance, and now that we're seeing that there are capabilities of still being able to do a refinance as long as you catch up on the forbearance during the refinance itself. So for those that either want cash out or they're just looking to change the rate and term, lower their monthly expenses, obviously you still have to be employed and be able to repay the loan itself. But I can tell you one of the biggest things really to keep an eye out for, especially to us in South Florida, the condo market obviously is going to start to see some shifts just from an inventory standpoint. There's so much opportunity in first-time home buyers when it comes to certain types of buildings. So if that price point is somewhere around that 400 range for a 2-bedroom or whatever it may be, you can actually get an FHA spot approval. So for those borrowers that may not have that perfect credit history, or they're lower on the credit score side, or they need a higher debt to income ratio allowability, this is a huge opportunity. We're having a lot of success with FHA spot approvals. That means 3.5% down. This is not something that most lenders go after because it's tough. But the reality is that as long as the agents involved are providing the right information and are educating not only the seller and the buyer, this is a huge opportunity. So I would really, start to try to see how this could be something that could provide a lot of capability to buyers that may not otherwise be able to find exactly what they want. So this is one of those things really keep an eye out for, and definitely reach out to our office. We're happy to help you understand that and run you through it.
And Justin, if people want to get a hold of you after this presentation, how can they do that?
They can call me directly on my cell phone, or they can call the office itself. So my cell phone number is 954-551-8357. The office number is 888-540-2939. And then obviously you can reach us, through the social medias and stuff like that. I know that you guys push that stuff out constantly, but as far as my email address goes, it's justin.bush@cardinalfinancial.com.
Justin, be sure to throw that in the chat as well in case somebody needs to refer that for later. Any other final words before we send it to our instructors?
No, let's let her rip.
Excellent. Ashley, Nicole, are you in the building?
We are in the building.
You are ready to rock then. Thank you so much for hosting this class, and we look forward to the great information that you're going to present on today. Floor is yours.
Thank you. Okay, thank you everybody for joining us today. Before we get started, if you're able to, please put your cameras on. That way we can get more of a classroom feel. Any questions that you have throughout the presentation, just be sure to put it on the chat box to the side, and we'll go over them as we're going through the presentation. And then at the end, we're also going to have a section for Q&A. So quickly to introduce myself, my name is Ashley Silva. I'm one of your Miami YPN 2020 leaders. I've been a realtor for over 3 years now, and I'm with the Colo Banker at Ventura office. And this is my first year on Miami YPN board. One of the reasons I love it is because I feel like we're always striving to provide resources for you to grow in this industry. And right now with the current environment, short sales is one of the huge topics that's going to be coming up. So it's important for all of us to have some information on it. And today, that is why we brought on the short sale queen, which is Nicole Espinosa. She founded the Short Sales Queen. And Nicole and I actually met when we were teenagers back in Orlando, Florida. We reconnected through social media, and she's been doing this way longer than I have. But what's been exciting is being able to see how she's grown her business and how she's really become an industry leader, especially in the short sale landscape. So we all heard the saying, like, riches are in the niches. Well, this is definitely her niche, so much so that she even wrote a book about it, Short Sales Uncensored, which is on Amazon. And she's provided a ton of resources for realtors who want to learn more about short sales, and we'll get into that at the end. So yeah, welcome, Nicole.
Thanks for having me. I appreciate it.
Of course. So tell us a little bit more about how you became the short sale queen.
Yeah, absolutely. So got into the business in 2009, and my background is actually working with asset managers. I was doing REO when it was, the only thing that was really flooding the market at the time. Got out of that, got my license, and was doing traditional real estate for about a day before I came across my first short sale and developed the process that we do now. For the first couple of years, it was just trying to figure it out. And then, after a couple of years, I started teaching classes about it. And then, fast forward 5-6 years later, I wrote Short Sales Uncensored, and it's on Amazon Audible, audio, whatever. And the actual physical book is available as well as a resource for real estate agents, because when I was doing it, there was no real information out there. It's so different from traditional real estate, because it's not only the component of selling your house, and I know we'll get into that, it's also negotiating, and every single one's different. So it was really doing thousands of transactions later that kind of figured it out a little bit. We're in 9 markets right now. We have 11 employees, 11 people on staff, and we have about 12 agents in our network.
Yes, so Nicole is in Texas, but she does have a team here in Florida as well. So she's very familiar with this market, and it's her home state. So,
yeah.
Okay, awesome. So we're going to get into the presentation here. All right, so navigating the dreaded short sale.
All right, so you want me to just jump in, Ashley?
Sure.
Okay, awesome. All right, so first thing we want to go over, obviously, is what is a short sale. So we're going to, there's a lot of misconceptions, kind of what Justin had said earlier. There's a lot of things that people don't understand about short sales. So I want to start with first what it is and what it looks like. A short sale, when you are an agent and you are at a listing appointment or talking to a potential client, you are going to sit down and find out how much the seller owes or what they're wanting to list it for. And once you determine that they actually owe more than the house is worth, that is a short sale. The homeowner would have to come to closing with some type of funds. And in that case, if they can't afford it because they have some type of financial hardship, instead of them having to pay the difference or go into foreclosure, we actually get the lenders to take a loss. So as an agent, if you're actually wanting to represent these homeowners, you're going to be going to the bank and negotiating and settling with the bank to be able to get them to forgive that difference of how much they owe compared to what it's worth. In order to qualify, like I said, they have to have some type of financial hardship, which we'll go over all of the hardships, but just something that we can actually prove to the bank of why they can't pay. So for example, a lot of times agents will see someone that's in foreclosure and automatically assume it's a short sale. They have to have both components. So they have to have no equity and they have to have some type of financial hardship. All right, so the next, I don't know how to move the slides. There you go. Which on here, I apologize. I guess it's a little bit harder to read on here through Zoom, but the financial hardships that qualify can be death. These are the most common: death, divorce, loss of income, loss of job, excessive debt, excessive medical bills. Those are just the most common that we see. Basically, anything that you can prove to the lender. I mean, we've had situations where they just, mismanage their funds. I mean, what we're going to see with COVID, to Justin's point about the forbearance, there's 6.6 million people that are that have filed for government loans for forbearance. So they are, in the next couple months, I truly believe we're going to see waves of people that are going to need to sell as the market starts shifting, because once they, they're in this situation because of COVID-19. And once the forbearance is up, they're going to either need to, pay in full, which is pay the months that they haven't been paying because they got a break through the forbearance. If they can't afford that, then they're going to have to do a loan modification, or just sell the house because they determined that that hardship is no longer temporary. Whether it's their business shut down. So this is definitely not like 2008, 2009, where there was so many bad loans. In the situation that we're in now, people were forced into this situation because the government shut down, right? Our whole economy shut down. So we're going to see a lot of different types of sellers that, not necessarily mismanaged their money or had excessive debt, but that were forced into this situation because of COVID-19. So I think, right now the most common forbearance is 90 days to 6 months, 3 months to 6 months. So I think in the next couple months is when we're going to see the first wave. And then in the next year, once they have exhausted all of the loan modifications and really all the other options that the bank is offering. And unfortunately, I try to put as much information out there on YouTube and on social media, but unfortunately, most people, they don't know really what options. And so you guys as real estate agents are going to be the person, hopefully, that they go to as the professionals and as the industry leaders to give good information on what they can do now. So it's definitely really important to understand what those options are and how you can help those people. Okay, so no, go back really quick, sorry. So in order to show the bank that, in order for them to qualify, they have to show their financials. So very similar to when you are applying for a loan, where you have to show your bank statements, your pay stubs, your tax returns, and all that. You have to do the same thing when you are applying for a short sale. Any loss mitigation option, you have to show the bank that you have some type of financial hardship. So this is, we know how much our clients are literally, paying for toothpaste. Like, it's very personal. And a lot of the objections that we'll get from clients that kind of don't understand is like, why do you need to see my personal, information? And it's because we have to show the bank that they do have a legitimate hardship. They're not holding on to, a bunch of money and they just don't want to pay the difference. So that's what the bank does. And the bank goes over absolutely everything. So we have to show them 2 months of bank statements, the last 2 months of pay stubs, their tax returns to make sure that they don't have any of their properties or a significant amount of income, and really any income that's showing up in their bank statements. So that's how we prove the hardship. And if you guys do have questions, Ashley, I know you're moderating, so you can always ask questions to break up as we go through the presentation. So when you are representing a homeowner in a short sale, you have to, the best advice that I can give you, if this is something that you're wanting to do, is to make sure that you have everything signed up front. So this is a different type of homeowner. So a lot of times agents, they have their, hats on, their traditional hats on, where they're like, hey, the seller's going to tell me if they're in foreclosure, the seller's going to tell me the information. And unfortunately, these type of clients, they have their head in the sand. They're overwhelmed. A lot of times they don't even know what's relevant to tell you. They just know that they need out of the situation. So it's really important that you are driving the bus in this transaction. And unlike a traditional sale where the seller will tell you, hey, I need it for this price, or, this is the way it's going to be, you have to ask the right questions. Truly, the only real way to be successful in doing short sales is to make sure that you're asking the right questions, because otherwise you're going to be in a situation where things are going to pop up at closing. A lot of the referrals we get are from agents that they found out at closing that there's a HUD lien, or they found out closing that there's a second lien because the seller didn't tell them and they didn't know to ask that. First of all, liens don't ever just pop up. We can definitely find out that information first. The first thing we do is pull title when we get a listing, because we want to make sure that we know exactly what we're negotiating. The reason why short sales are a niche and the reason why it's so important to understand them is because you're the one that's determining and negotiating with the banks, which means that if you don't account for everything that's owed, the bank, now who's going to come up with the funds? So the seller doesn't have any money. The house is being sold as is, and the bank is only going to agree based on the information that you provide. So for example, if you don't know that there is a second lien and you get an approval from the bank, now you have to start all over because you have to get that approved as well.
Okay, and then we have a question: forbearance versus forgiveness. Because just to put, forbearance isn't a break, it's merely a short-term solution.
Exactly. And a lot of times so what's happening now is a lot of people, and I'm starting to see a lot more articles because Fannie Mae actually put out a press release trying to clarify, because there were so many articles and misinformation when all of this happened, that forbearance is, hey, don't worry, your bank's going to cut you a break. But forbearance is, first of all, when have we ever, you're laughing because whenever is a financial institution going to give you a break on your payments, right? But what they're not understanding is that, say, for example, you had a 3 months forbearance, that means your payments were on pause for 3 months. But at the end of the 3 months, you need to pay not only those 3 months, but the following mortgage payment. And if you couldn't come up with that one payment, it's going to be very difficult for you to come up with all of those payments together, which is why the people that have gone into forbearance and didn't plan to pay all those payments are now going to be forced into doing another workout option with their bank, which could be a loan modification, or something else. And it's going to put them in a worse situation because a loan modification is changing the terms of the loan.
I've actually spoken to sellers during this time who are afraid that they're not going to be able to pay their mortgage payments. So they thought that they were going to get a break throughout this entire time. But then they were also wondering, what if they sell their home while their home is on forbearance? Of course, they would have to pay all that at the end. But if their home is on the market for longer than the 90 days, then by that 4th month, they would have to come up with all of that money up front.
Well, I'll just chime in real quick. It's definitely at some point going to activate what is a default, right? So if they haven't gotten caught up to meet the range of default requirements per the servicer, which can vary. So some servicers may be 75 days, other servicers could push out to what is more like 120 days. So I think the most important concept for the forbearance is that this is for those in need. For those of us that can afford to pay it, that have the savings, that have the capability, really we should continue to make our payments. This is not only putting stress on our financial institutions, but our economy as a whole. So making it more difficult for our future. The reality is that all of this funds that came into our economy really kind of out of nowhere, we're going to be paying back on some level. Whether it's through taxes or through, maybe we're having to let go of certain programs for people. So the most important thing is that if you have a seller who really is thinking that they're going to really have to stay in this forbearance, they don't know if they're going to get their job back, this is that short sale perfect opportunity, right? Because they know that their hardship really isn't ending and they're not necessarily going back to work, or they're not going to be able to recover. And so they may need to make a different, decision than most would.
And to add to that, I think that, and of course, it's only a short sale if they don't have equity, right? So actually, if you have clients that are reaching out to you saying, hey, I need to sell now, all they're doing is being proactive, which is great because then they're not going to be in default and they can kind of stay ahead of the curve. It's really, as a professional, the best advice we can give is, hey, let's not think right now, let's think long-term. Is your situation a long-term, hardship? Is this something that you can utilize these 3 months to come up with the money? Or do you know in 3 months off the bat, there's no way you're going to be able to come up with those funds? Okay, if that's the case, then hey, let's talk about selling so that we can get the most, out of the equity that you do have, instead of giving it back to the bank with restructuring the loan.
Right. As soon as you start triggering default, right, it starts to get really expensive. Attorneys start to get pulled in from the bank side. They're going to start charging you additional fees. You're compounding a lot of things that can get extremely expensive. And I think that you hit the nail right on the head. Like right now, the opportunity for the agent is get out there to your previous client base or your sphere of influence and say, hey, are you afraid of where you're going to be in 3 months or in 2 months? Like, let's have a conversation now so that we can set you up for the most success possible. And I think that consultative approach for a market that's a little complicated right now, because how do I reach out to my customer as a realtor and ask them to sell their house, or do they want to upgrade? Now the conversation is a little different, right? You have a very proactive, I'm here to help you, love you, and really see how we can make sure that we're setting you up for long term.
Yeah, I've told all of our agents that this is the perfect time to just check in on your people, right? Check in on your sphere. And they're having more conversations now than they've ever had. And like he said, it's coming from a place of, hey, how's it going? Like, how are you being affected? Because it's an easy way to not only build rapport and stay in front of your people, but they know, like, they're going to come to you when they're in a situation where they have to get out of it. And it's so much better as you as the professional than the freaking internet with the random articles or someone's Facebook post or things like that. So that's how you can really honestly take advantage of what's going on and stay in front of more people.
Yeah, and even better, I mean, think about all of those that are going to do just fine through this, right? A lot of people are really going to come through this unscathed. And now you've really created an opportunity to be top of mind for that previous client or maybe a new client. We're here. I really take that consultative approach. We do this on the lending side. I mean, listen, if I got a loan for every person I spoke to on a daily basis, I wouldn't have time to be on this call. But the reality is that there's so much opportunity, and really taking this approach of you care, right? Because you do care. And this is a great way to really separate yourselves, because a lot of people are taking time off right now. They're more present, they're able to listen, they're able to communicate differently. And a lot of, realtors, not to say that, all realtors are ever created equal. Those who really stayed and went to work during this time and are having these conversations and are trying to provide valuable information and content and just saying, hey, what are you afraid of? That's just, I mean, you're going to be on the phone for 15 minutes or 20 minutes with every single customer, and they're going to talk to everyone about the fact that you called them. And it's just basic sales 101, right? You call because you care, and I think that approach alone will drive a lot of success. And then also too, it will turn right back around into, all right, we have to come up with that solution, which is that short sale or whatever it may be. You're dead on.
Absolutely. So did you have any other questions, Ashley, or do you want me to go back to it?
Oh, that's it.
Okay. All right. So going back to actually representing the homeowner, like I said, making sure that you're compiling everything at once. Understand the biggest part of short sales is understanding the client. And the reason why I say that is because we can do everything right in negotiating with the bank. But if the homeowner doesn't have the correct expectations, if the homeowner goes MIA and disappears on you, your sale's dead. It doesn't matter. So a lot of it is in the very beginning that we take advantage of their willingness to cooperate and say, look, we need this from you. This is how long the short sale is going to take. And we get everything signed at once while we know that they're motivated. You can, as far as putting together a short sale packet, depending on who the lender is, you can actually go to the website and they will have like some of the basic forms. If you've never done a short sale before, you can actually call them and ask them for a list of exactly what they need. The other really important thing to do when you're talking to these homeowners is finding out where in the foreclosure process they are, because you want to know what deadlines you're up against. With these type of clients, I'm now in Florida is a judicial state. So a lot of times, or not all the time, they have to go through court. Like Texas is non-judicial. So it's one of the fastest foreclosure processes. So if someone is in foreclosure and they have a house in Florida, they know they're in foreclosure. They've been served papers. They have all of those documents. Now, I've gone to appointments where homeowners don't even open their mail. So don't be surprised that they're not going to be some people might not be forthcoming with the information because sometimes they just don't know. Sometimes it's just a matter of the fact that they've been behind for 2 years and nothing's happened yet. And they're like, okay, well, I guess nothing's going to happen. And a lot of these homeowners are unfortunately delusional. So, and that's honestly the best way to put it. And I'm sure Justin can attest to that if he said that he worked with short sale clients before. That's the best way, because the longer that they're behind, the more delusional they are. Sometimes they think that nothing's ever going to happen to them, or they have no sense of urgency to cooperate. And what we tell them is the longer that the process takes, the further risk of going into foreclosure. So we try and get it done as soon as possible.
And with the foreclosure information, through the Miami Association of Realtors, we do have the resources where you're able to go in there and find out what's going on with the home. And I'll put those at the end, but it's like RPR, Realist, IMAP, and then Remind Pro, which is now available for all of us. But you can find the case number on there, and you're able to go to the public records, county clerk of courts, to be able to get that information to see how far along in the process they are.
Yeah, absolutely. And Realist is probably like the most simple. When you just pull up the tax rolls, it'll actually tell you in MLS if it says pre-foreclosure or auction. It won't tell you if it's auction, then they have a date, but you'll at least know if a substitute trustee has been filed. So you'll know, where they're at least know that they're in foreclosure.
Okay, and then we have a quick question. Don't we need to list the sale first at market rate before approaching the banks for short sale approval?
No. So the bank, it depends on what type of loan that they have, that there are smaller conventional lenders that will require an offer before even, opening a short sale, but we don't list it first. And this is the way that we do it. So I'm just going to tell you our process, and I'll tell you why. You can absolutely get a listing agreement signed and stick it on the MLS. But the reason why we don't do that is because we don't want to play a guessing game of what the lender will accept. We want the appraisal and the BPO to be ordered first, so that when we list it, it's an approved price. Because otherwise, what you're doing is you're just sticking the house on MLS at a price that you guesstimate, and the buyer is so excited, they get under contract. I see so many agents that they spend money on appraisal and inspection, and oh, by the way, the bank counters $50,000 more. And then the buyer's agent, you're going to get into it with, and the buyer, because they can't wrap their brain around the fact that you signed a contract for $50,000 less, and now you're countering. So for us, it's a much smoother process if we let the bank, because at the end of the day, it's not up to the seller. It's not up to you. It's up to the bank to determine how much they're willing to accept. So we want to streamline as much as possible, so that way we can encourage more people to put in offers on our deals, because there is a stigma, right? It's completely up to the agent on whether this transaction is going to be successful, because they're the ones negotiating. So if you're an agent and you're negotiating with the bank, if you don't know what you're doing, you will get your client foreclosed on. And that's a fact. Like, there's no like, oh, maybe, no, you will, because the bank is not going to be forthcoming and saying, hey, Ashley, you didn't submit this, this, and this. No, they'll just shut the file down, because they're working on 500 to 600 deals at a time. So they're not going to chase you, and I see so many agents that just sit back and say, waiting for the bank to tell me what to do next. And it's like the blind leading the blind. Which is why, and I'm sure you can hear how passionate I am saying this, it's why I try to put so much information out there, because this is not something to just take on because you have a license and you're excited that you got a client. This isn't that deal. Because if you don't know what you're doing, that client's going to lose their home because they trusted you with the process.
And I think to your point, I'm sorry, just to chime in, is that think about how this really saves you. Time is money, right? That's really what it all comes down to. If you can save a ton of time, and also if this helps you target the capable buyer. So if you have an approved price and that cash buyer is really only willing to go to this level because they're an investor and they have a different approach, but you have someone who's a first time buyer and you know that they've already been fully approved by their bank, and meaning they actually have an underwritten loan up to a certain dollar point in this monthly payment amount. If that hits your short sale price or it goes $5,000 above, in that case, you just saved your seller $5,000 in 1099 income, right, through the IRS. And I'm sure you're going to touch on this stuff down the road, but save the time, right, and create that target so that you really know how to accept an offer differently, right? I mean, I think that's the biggest impact by doing it your way, because I used to do it the other way, and we found out very quickly that you fail and you spend, instead of 2 months on something, you spend 8 months. And it really was something that was tragic, honestly.
And honestly, I would never do short sales if I only did 1 or 2, because it doesn't make any sense for me to spend 6-8 months on one deal and then do traditional, and really, you, just like anything else in real estate, you're going through this process and things are constantly changing and evolving. If you did short sales in 2010, 2011, you have no idea what's going on now because the guidelines are completely different. So you have to be super careful. And like to your point, Justin, you'll learn real quick because you'll have so many pissed off people, especially, dealing with the buyer's agents and the buyers, because they only go off of what you say, right? So if in a normal transaction, you sign a contract, it's supposed to be done. So that's why, it's really important that you, like for us, at least to answer the question, because that's where all this came from. That's why we try and let the lender, do the appraisal first, the BPO, and let them determine their minimum net. And even with like Fannie Mae, they'll have like a list guidance of where they want you to start based off of those appraisals. And that's where we go. And we tell the sellers that too. And going into the slide where it says set sellers expectations, you're going to have those homeowners that are like, absolutely not. I want 500,000 for my house. And you have to explain to them, because of how much you owe, this is no longer up to you. So if the bank is willing to accept 300,000 instead of 500,000, then that's what needs to happen. Of course, we're going to do our due diligence and our fiduciary responsibility and get you the highest offer. But this is no longer up to you because the bank is the one that's taking the loss. So they're the ones making the decisions. The other important thing to do as far as setting expectations is the time frame. So because it does take a couple months, we have to make sure that the sellers are still being involved. Like the way our office is set up, every single Monday, there is an update that goes out to the homeowner, to the person that referred it to us, and to the buyer, because everybody needs to be on the same page. Like we've had, like say you have a buyer that's on board and it's coming into 45 to 60 days and then they walk. Well, you just spent all of this time trying to negotiate this offer and then they terminated. So you're starting over again. So communication is everything in this process in order to make sure that all parties stay engaged and stay on board.
And once a short sale is approved, how long do they have to sell the property before it turns into a foreclosure?
So the foreclosure process goes on regardless. When we're in short sales, they have the right to still move forward with foreclosure. What we do is if there is an active short sale open, we can get it postponed. So that is definitely a common misconception that people think, okay, well, you have to close before an actual sale date, which is not the case. We get them pretty much all of our inventories in foreclosure right now. And every single month, we just have to make sure that we're staying ahead of it and requesting postponements. Once you get an approval letter, they give you 30 to 45 days to close. So that approval letter is going to supersede the terms of your contract, because your contract is going to be contingent on the lender approving it. So if, for example, if the lender gives you a sale date or a closing date of June 1st, but your contract says June 30th, and we go into this slide later on, but it's so important that you understand that you have until June 1st. And as a part of making sure, like we talk to all parties, like if there's a lender involved, they're not used to that. They're only used to, their own guidelines or their own timeframes. So we have to explain to them, hey, look, you only have until June 1st to get this done in order for us to close. Otherwise, we have to submit for reapproval and go through this all over again. Okay, so put together a couple questions that are really important. This is probably going to be more common of you representing a buyer, unless you're going to be taking on and doing short sales yourself. That, I just kind of explained very briefly of what the listing agent needs to do. So because the listing agent has so much control of the transaction, it's really important to ask the right questions to make sure that it's worth your client's time. So for example, if your buyer has a deadline and has to move out of their apartment, in 21 days, it's probably not a good idea to put an offer in on short sale. If your client has some type of outstanding, like deadline, it's really important to tell them like, hey, we're not going to have an update every single day. Like setting their expectations of what the process is going to look like. Yes, they can get a good deal in a short sale. A lot of our clients not clients, but a lot of the buyers on our deals, they get under value or under market value, but they have to wait and they have to understand the properties are being sold as is. So this isn't where you put it under contract and say, oh, inspections came back and you need to negotiate another, $10,000. It doesn't work that way. If the bank has approved a price and have determined what they're willing to accept, that's it. It's not negotiable. So when you're talking, so say a buyer, one of your clients, they found a short sale online and they want to submit an offer. The first thing I would ask the listing agent is this an approved price? Because of the question earlier is the perfect example that a lot of agents don't know. So they get a listing agreement. They're so excited. They stick it on MLS and they're saying, hey, let's do a short sale. Well, if they haven't even started the process, they have no clue what the lender is willing to accept, which means they're at the very beginning of the process. So You're looking at.
1 second, sorry to cut you off, because James, he's asking what's an approved short sale. So basically she's explaining it right now, because on the MLS, a lot of agents just put it on without it being an approved short sale. So that's why a lot of times it says unapproved short sale, and it can be months before it does become approved. And that's the part that she's explaining right now, to make sure that what the bank is willing to accept in order for it to be an approved short sale.
Absolutely. So that's the importance of asking that question, because if the agent responds and says, hey, we just know it's going to be a short sale, then you need to tell your buyer, hey, we're looking at months of waiting, which is fine if it's worth it for them, but understanding that the terms of the contract they're signing are going to change. So I wouldn't order an appraisal with their bank. I wouldn't go through that process yet or spend any money until the bank can come back and say what they're willing to accept. So that's first of all. The second question I would ask is, how many liens are they negotiating? And the reason why that's important is, one, if they don't know the answer to that question, probably a little scary that they're negotiating it, and that will give you an indication of whether you want to move forward or not. But also, that if they have multiple mortgages, that they not only have to get approval from the first lien with the first mortgage, but they also have to get approval from the second, which adds to the time frame. So if you go through the process and you negotiate with the first lien holder, like your first mortgage, and they agree to, give you an approval letter, you now have to start the process with the second lien holder, which is the second mortgage, and get them to agree to take a loss as well, which sometimes is the hardest part in those deals, because the second lien always takes the biggest loss. So the reason why that question is important, because that you're going to have to wait a little bit longer to get both of those approvals.
Real quick, and not to mention, we often here in Florida especially have HOAs. We have so much condo inventory here. So HOAs, Fannie Mae came out with a directive. I don't remember which year it was, but this kind of occurred after our last foreclosure and short sale boom, which was that the HOA has to take, if the HOA isn't willing to take a maximum of 12 months of HOA, payments as their payoff, even if they're owed 2 or 3 years worth, which can be the case in sometimes, right? It's very difficult for the HOA to foreclose compared to a second mortgage or a first mortgage because of the expense associated with the same. So they don't necessarily push through it at the same pace. What you'll find is that this might be that one factor that hangs up this transaction. You got your first mortgage approved, your second mortgage approved, and now you've got an HOA that says we need 2 years of our HOA payment. Who's coming up with that last, that 1 year worth, or that 2 years worth that may be owed? So, again, to Ashley's point, if you're not really on top of understanding all the liens associated with this transaction up front. And I think somebody asked that question earlier, which is what's the order? And to your point was start with title, figure out how many liens are on this property up front so that you really understand what type of waters you're navigating. Because if you think it's just one mortgage and it turns into 3 people that need to be paid off, you're in a whole different world. And now you may have wasted a ton of time.
Absolutely. Yeah, that's, don't even get me started on HOAs. They're,
a lot of people are asking about that, like unpaid condo maintenance and property taxes. So all of that has to be negotiated, and all of those liens are.
So anything, if you guys, the easiest way to think about it is that anything that affects title, anything that's owed against the property has to be negotiated. And what you need to understand is that the bank's taking a loss, which means that everybody else is. So we could do a whole other class on mechanics liens and judgments and HOA dues and all that, excuse me. And yes, it's possible. I mean, I have fought with the worst homeowners associations, from like large property management companies to one single person that think that they're God because they have the authority to say yes or no. And it's just, oh my goodness. So, but it's absolutely possible. And the way we get around it is we kind of try to get them to meet in the middle. So that's how we're able to negotiate it. So the last question also that I always suggest is how far along are you in the short sale? Kind of going to the first point of figuring out timelines. But I think I kind of beat that dead horse, so we can go to the next slide.
Yeah, I have a couple of questions here. So how long what's the average turnaround time you're seeing now, and has anything changed since COVID began?
So our average time frame is 3 to 4 months. We actually, so in the beginning when this whole thing happened and everything shut down, I was freaking out because most of the lenders were not equipped to work from home. We focused on the smaller lenders and the smaller servicers because they were already set up that way, where we were able to get things streamlined. Now they are moving super quick. So it is even more important, like for my team specifically, COVID-19, it was actually kind of a blessing for our communication because it forced us all to over communicate. And we were able to streamline a lot more because, every morning we were like, okay, we're not sitting next to each other, so let's, knock things out. We've actually gotten 3 approved this week, in 2 months was the total from start to finish, which is absolutely incredible. If you look at the average time frame for short sales in the industry is like a year if it gets approved. So we were able to do that for 2 months. But remember, the time frame, there's so many different factors of why short sales can take a long time. One, starting with the person processing it, right? If you don't know the paperwork to submit, it's going to keep going because the bank is going to say, oh, we need these documents. You never submitted them last month. And that's how it takes forever. Problems that come up, those kind of things can delay, like bad values, like say the bank's unrealistic on price. So there's a lot of different factors of why short sales can take forever, but our average time frame is 2 to 3 months.
Okay. 2 to 3 months. And then someone asked, if they're representing a buyer in an approved short sale and the appraisal comes below the approved short sale amount, will the bank reduce the sales price?
You can absolutely try. So if the bank, so we've seen that a couple times where we've done one of 2 things. One, we will send the buyer's appraisal to the lender and, let them know like, hey, this is what's going on and try to get it reduced. Or we will get the bank's appraisal and compare it to the buyer's and try to negotiate that way. So yes, the bank will reconsider only if there are things that are going to affect value. For example, if the buyer's appraisal factored in, repairs that affected the value and the lender's appraisal didn't, that's how we can get it reduced. So there are ways to get it negotiated.
Okay, awesome. And then I'm getting a couple of more questions, but I'm going to keep going. And then at the end, we can come back to these.
Okay. So go back really quick, the slide. There you go. So I can't stress this enough. I think I've said this a couple times, so obviously I think it's important of setting the expectations, especially with your buyer. We've had buyer's agents that will call us and text us literally every day. And I'm like, okay, look, like this is not a thing. Like we're not going to have updates for you every single day. So just understanding the time frame of approval. The rule of thumb is that that it is approved price. If the bank has indicated how much they're willing to accept, there should be no reason why you can't get approval in a couple weeks. So if we list a property on MLS and it's an approved price, we've already gone through the process, we generally get approval letters in a couple weeks. But it's all going to depend on where they're at. So just explaining that to your buyer is really important, and making sure that your paperwork reflects that is also very important, because you don't want to put a contract in for 20 days and then have to keep constantly getting it extended. The other thing that's really important that I kind of touched on earlier is making sure that you're understanding that this is not negotiable. The buyer is willing, if they're putting in an offer and buying a short sale, they're willing to accept the property as is, which means that if something happens to the paint, to the roof, or this or that or whatever, like it's not negotiable. The lender is not going to make repairs, and the seller's not going to make repairs or contributions. They're actually not allowed. So it's not a situation where you try to be creative. They're not actually allowed to contribute anything to the sale, because the bank won't approve that, because the bank's taking the loss. So the bank's like, hey, if you have anything to contribute, it's to us, not to the buyers. So they will deny that. And then just understanding that the lender deadlines supersede anything else. So if you're a really creative agent and you're a great negotiator and you got the sellers to sign off on seller concessions for $10,000 and all this crazy stuff, if the bank's approval letter doesn't reflect that, because remember, everything's coming from the lender, not the seller, it doesn't exist. So that approval letter, read through it, read through the terms, because that is going to supersede your contract. Before you actually close, the bank actually requires the final HUD to be approved. So if you try sneaking in something or adding something, they will deny it. So those are like the key points that, hopefully you guys can take away from, of at least understanding like the concepts. And I mean, I had a 2-hour class. So I was telling Ashley, I was like, let's have quite Q&A, because I know that you guys are going to have specific questions. There's so much to it, but hopefully this will give you guys at least a couple things to take away for when you're putting in offers or talking to homeowners.
Okay, really quick before we get to the Q&A, these are the resources I mentioned. We have the IMAP, Realist, RPR, Remind Pro, and there's a class for Remind Pro that we just got upgraded for free. If you're a member of the Miami Association of Realtors, it is this Friday at 1 p.m. And then here is our contact information, which I'll put back up before we end the class. I just want to go over some questions real quick. But a lot of what Nicole talked about, she has, like I said, great resources on her YouTube channel, The Short Sale Queen. Many different videos that are very helpful with all of this process. And the Instagrams there, emails, and phone numbers. But let me get here. Okay. So someone asked about commissions for both listing agent and buyer's agent. Like, who determines that?
The listing agreement determines that. So the bank will pay generally, now remember, commissions aren't fixed, right? So it's whatever you submit, but overall the bank will, for the majority of the time, pay 6%.
Mm-hmm. And then the bank can also reduce that, right?
Correct. We used to have to fight for a commission a couple years ago, but because it's so standardized now, especially with like the HOFA, the Making Home Affordable programs that they have in place. They pay 6% for commissions. The stupid lenders, the little small ones that tried getting snarky with us and saying that we don't deserve the money that we work so hard for, they're out of business now. So it is what it is.
Hey, actually, I have a quick question, Nicole, for you. As someone brought this up on the call, which came to, what happens to that loss, right? So the bank writes it off, the borrower may or may not get a 1099. So what percentage of the time are you seeing that shortfall portion, the deficiency itself is issued as a 1099 where the borrower would have to somehow declare, expenses to offset it from a tax standpoint? But let's just talk about the basic side of it from a percentage standpoint in your experience, especially over the last, let's just call it 3 or 4 years, since that's really where your focus has been. Are you seeing them forgive that versus, issue that as a 1099?
Absolutely. So 2 different things. So one, you have the deficiency, which is the difference between how much they owe and how much we sell it for. 100% of the time it's forgiven. So we actually get that in writing in the approval letter that they will forgive the deficiency, which means that they're not going to be pursued for a judgment. It's going to show on their credit that it's paid. Sometimes they mark it as paid, settled for less or whatever, but it is going to show as a paid transaction or a closed settled transaction. Now, the 1099, the lender is completely different. So the 1099 that they can report for income, they have every legal right to do that. But the 2007 Mortgage Debt Relief Act actually covers them. It gets retroactively extended every single year. Now with COVID, they haven't extended it for 2020 yet, but they're covered. So basically what they do is if they do get 1099 from their lender, they file a 1099-Z and it cancels out, washes out the debt.
That's great to know. Honestly, that's something that I've been out of that business for so long, and that's great to know. I didn't realize that was something that was automated almost at this point.
Yeah. So hopefully they've been trying, instead of extend it every year, they're trying to just make it into a law.
Right.
Because, at the end of the day, short sales, even though, yes, right now they're going to be more prominent, they're never going to go away. Even in the best markets, because people are always going to have some type of financial hardship. So hopefully they just make that a law and don't have to worry about it. So.
Right.
Okay, and then someone asked about the short sales package, and you said that you typically get from the lender, correct?
Correct. So we have, like for us, we have customized ones for every lender because we know, like, even though the basics that they have, like if a Wells Fargo has ever asked us for a document, we're sticking it in the packet and the seller's going to sign it up front. But if you're just starting out, you can absolutely call Wells Fargo, for example, and ask them what documents that you're going to need. And they'll either send you the links to get it, or they'll tell you exactly what they need.
Scenario.
So let's talk timelines again real quick, Nicole. So typically when you submit your short sale package, it takes about 2 to 4 months, right, to get the short sale approved, and then you go to listing, or you're talking 2 to 4 months
Total.
Okay, that I wasn't real clear on that. That's phenomenal. That's great.
Actually, super exciting because obviously the lower the timeline, the processing, the more profitable we are, right? Because if I've got 11 people on staff, so if I'm paying every month just to work on these deals, and it's extending 6 to 8 months, it's starting to make less sense. But we actually,
because it's more processing than it is negotiation, right? I mean, let's be honest, it's more processing.
It's like, right. Hey, did you get this? Hey, did you get this? Hey, did you get this? Like, hey, can you actually read my email? Type of thing.
Where's my BPO? Is it approved? Do we need a second BPO? Because how often do you have to have a second BPO, by the way? And someone did ask that question. What is a BPO?
So a BPO is a broker's price opinion. It's a agent version. It's like a fancy CMA, right? It includes like repairs and pictures, but it's very basic.
So it's somewhere between what would be a CMA and an actual appraisal itself.
So FHA, government-backed loans, they actually require a full-on appraisal for an interior. For conventional loans, they'll do BPOs or they'll request BPOs. And now I forgot the question. What was the question?
So I guess the question was,
Well, they wanted to know what a BPO.
They just really want to know what a BPO was, because you kept saying BPO and they just weren't sure what it was. So I think you hit that point.
appraisal.
It's basically a realtor
version. Yeah.
version of an appraisal. It's not done by a certified appraiser.
Mhm. Okay, somebody asked about, do you think the tenant occupied properties will get cash incentive from the short selling bank to the tenant for moving expenses?
Yes. So if it is occupied, if they go through the Making Home Affordable program, the tenants will actually get $3,000 for like a cash for keys for moving. The main requirement to get any type of relocation assistance is the fact that they're still occupying the property. So this is just across the board. It has nothing to do with COVID or anything like that. This is just part of the Making Home Affordable program.
Okay, and that's for tenants and the sellers that are in the property, even though they're going through a short sale, they can still get relocation assistance.
Yes. So the reason why they do that, and the reason why the main requirement is that they're living there, is because they want the homeowners to be living there and maintaining the property. So we're actually required to provide a utility bill to show that they're maintaining utilities, because the alternative is that the house is vacant, which is the bank's asset, right? That's the value of the loan. That if it gets vandalized, the bank is going to have to pay like a property preservation company to secure it, and it gets very expensive. So that's why the bank's willing to pay relocation assistance to, one, help the homeowner, but mostly for them to make sure that the house is being maintained throughout the process.
Okay, awesome. And does anybody have any questions that they want to hop on the screen and ask? You can unmute yourself.
Actually, I have a question. So what percentage of the time do you see the buyer coming to one of your listing putting in an offer that you accept one that needs a loan? It's going to be their primary residence or a second home versus cash, because for whatever reason, because how often does someone purchase a property cash that's going to be a primary residence, right? So I want to get a feel just kind of what your experience has been.
So that is a great question, because a lot of times people think REO and short sale, just because it's as is, that it has to be cash. And that's not the case at all. It's all based on the property condition. So as long as the house will finance, absolutely.
As long as you get an appraisal through it, and you're going to be good.
As long as we're not going to have any issues with like a buyer, having an FHA appraisal and they're going to require repairs, anything that's going to eliminate them from being approved for financing, as long as that's not a factor. Honestly, most of the time in the situations where there's not significant repairs, we end up going with traditional buyers instead of investors or people paying cash, because they're always going to pay more.
Okay, so two points to that. So right now we are seeing on even purchases on a number of occasions where we're getting appraisal waivers. I don't care if it's a 5% down or 20%. I'm sorry, it's usually not 5% down, but with those people that have a decent down payment, whether it's 10 or 20 or 15, whatever it is, we're seeing a lot of appraisal waivers in general for that type of loan. And this is something that Fannie Mae and Freddie Mac have really come to push since COVID-19 for obvious reasons. Less people on the property, less people in contact with each other, take advantage of social distancing opportunities, so to speak. And so keep that in mind, all you realtors out there, especially if you're getting into the short sale game. You may be able to take that conventional buyer that's got that 20% down versus having to take that cash buyer, which is maybe only willing to give $10,000 less for that property. So just something to keep in mind, because we're seeing so much success with that directive from Fannie Mae and Freddie Mac.
Awesome. And then another question, can a buyer apply for a 203K or renovation loan when buying a short sale?
Absolutely. So remember, when you think about, going back to my other point, that financing is condition based, not based on the type of seller it is, meaning short sale, foreclosure, or traditional. So whatever the house will finance for, they can absolutely do it. So 203K, VA, FHA, it doesn't matter. It doesn't have to be cash just because we're working with the bank, like with the short seller foreclosure.
And also remember too, there's no real VA loan limit anymore. I think that people have a misconception. You have to follow conforming loan limits. At Cardinal, we go to $2 million on VA loans. So that's one of those things where it doesn't have to be a high balance state to even have to take those into consideration. And we always want to help out our service men and women, especially our vets, right?
Yeah, absolutely.
And a lot of people have asked if the bank pays all the fees.
Yep, bank will pay everything. Seller's not going to pay anything.
Okay, does anyone want to speak up?
I see the chat blowing up. So
I know.
you guys want to actually ask me, or do you want to just keep writing in the chat?
Another thing someone asked earlier is if you're a short sale facilitator.
If I'm what?
Short sale facilitator.
Meaning?
I saw that one.
Yeah, where'd it go?
Yeah, I saw that one too. Someone said, this is great information, but also too, like you said, if you're only going to get into 1 or 2 short sales, you probably don't necessarily want to, go after 1 or 2 if your primary business is not this.
Yeah, so our business is 100% referral. It's been that way for the last 5 years. So if you are wanting to partner up with us or refer it over, then, my contact information's there. You'll get weekly updates from our office. So you'll know every step of the way what's going on. So it'll do a couple things. One, you'll have a feel for like, okay, this is the process, but you also know that your client's going to get taken care of. But yeah, so we're 100% referral. We don't do anything directly to consumers. So that's a big deal, especially coming from other realtors.
Where the 203K loan is, or the renovation loans are relevant, does that lengthen the process in any way?
From the loan side.
Yeah, from the buyer's
Good
loan.
question for you, right?
Leslie, how are you? Leslie
I'm good. How are you?
I'm good. Leslie used to be part of my real estate team. Man, that was
Long
back in
time no see.
2006, huh? Wow. Man, we
Long
go way
time.
back. Yeah, absolutely. So yeah, I think that no matter what, 203Ks really are complicated in general. Everyone always wants to do one until they do one. and then it's unless you really have, and I'll tell you right now, that is not what we specialize in. This is also similar to those that want to do down payment assistance programs and really work that small niche market when it comes to down payment assistance. Not that we don't do those as well as anyone, but it really takes a specialist, just like it takes a short sale specialist to do short sales. To do 203K, it takes a 203K specialist, someone who knows the ins and outs of the market, understanding how the contractor has to work, understanding that there's so many requirements through FHA and all the approvals necessary for those individual contractors touching that property is very, very complicated. That's really one of those loans where I would say, you know what, let me refer you to someone who's a specialist. I take more pride in my referral opportunities sometimes than anything else because I know what I'm good at. I'm great at condo, FHA spot approvals, which we're seeing a ton of right now, is a huge opportunity. But 203Ks, it's just a complicated loan. As long as the bank, right? So, Nicole's side of the transaction is willing to wait, then, that's really going to be the more complicated portion, I think.
I was just thinking along the lines of when we had the issue a few years ago, they were doing some really bad things to the properties before they were pitching the keys on the counter.
Yeah, you mean by pulling all the copper pipes out of the walls and
various and sundry levels of theft and destruction.
Right, of course.
So buyers are going to do a final walkthrough. So we get that a lot, actually. Like, what happens if the seller destroys it? I'm like, do a walkthrough before closing, right? So that's easily eliminated of being scared. And you also have to remember that if the seller does that, then that ruins their short sale because the buyer won't close. So, with the agents involved, you're not seeing those nightmares anymore like you did with the REOs.
And if they can afford to buy it cash, then, in other situations, if they can afford to buy cash and they want to refinance after, you can refinance with a new value price. If you got that great deal because you really were willing to commit to that property that had been completely dilapidated or whatever it may be, there is an opportunity from there as well. We're not gonna hamstring your ability to refinance from a cash out standpoint and an appraised value, so to speak, because you bought it because you got a good deal and you invested in it. That investment will be taken into consideration.
Okay, and if
Very
a seller
good.
mortgages with different banks, who do they know what bank to go to? to bring the short sale package with?
The seller has 2 mortgages. So you would start with the first lien holder, so the first mortgage. They're the ones that are going to determine the payouts for all of the other subordinate liens, which is the second mortgage, the HOA, and the seller will know who their first mortgage is with. So that will be really simple to find out from the homeowner.
Guys, quick question. This is Daniel Varela with Sun Realty Investments. How are you today? Thank you for having this amazing workshop. It's awesome. I'm really enjoying it. My question to you is, how about if you have a seller that has a tenant living in the property? How would you handle that?
So from experience, the best advice I can give the seller or you as the agent is tell them to get out. And the reason why is because once the tenant, now obviously I can't say everybody, right? Because they might have a good relationship. But what we've seen in the past are once the tenant finds out that the landlord's not paying, they take complete advantage of the situation and become an absolute nightmare with cooperation. I mean, I think I wrote this in my book. I can't remember if I wrote this story, but we had a nightmare situation where a tenant went rogue, locked all the doors. We couldn't get access. I mean, literally, like for every single showing, the feedback was that she wouldn't wear clothes to scare off the buyers because she didn't want to leave. And this was not someone that you wanted to see without their clothes on. Like, I mean, just everything possible that you can think of. And I wish I was exaggerating. So the best thing you can do is, yeah, exactly. That's how I felt, Leslie. Just mortified. But anyways, she was determined to get the house foreclosed on, and it worked. But she also subletted every single room. So every single person in all those rooms, they rekeyed it and locked their doors because they're living with a bunch of strangers. So,
wow.
So obviously that's the worst case scenario, but definitely making sure that the landlords are trying to get the tenants out, or have a great relationship, that they're on the same page, that they need to be in the process of moving, because they can cause a lot of complications for the sale. And technically, I know that the landlords are going to be like, hey, while you're doing the short sale, let me collect rent. Technically, that violates the mortgage agreement, because if they're getting rent, they're supposed to be paying the mortgage with it. So that can also cause complications when they see the financials. So best advice, get out and let us do the short sale so that we can move forward.
Yeah, and the bigger concern on our end from a lending standpoint is that if someone's purchasing the property as a primary residence that they can't occupy within 60 days, then we're not going to be able to proceed with the loan itself. So if we don't have commitment to getting them out, it really can get a little hairy. And so depending on how good your lender is on picking up the fact that this is a short sale and there's a tenant in there, you may be able to kind of snake by it, but it could create some serious hangups, especially as you get right down to the finish line. So keep that in mind.
Thanks.
Does that timeline, is that affected by the current COVID regulation that's out there?
What timeline?
Well, for Florida, I don't know if Justin, yeah.
Which timeline?
That tenants can't be evicted.
Oh, okay. I was like, what?
Oh, yeah, I was confused also.
So actually the CARES Act that was put into place because of COVID-19, as long as the government has, as long as this is a natural disaster or a disaster, the tenants are protected under the CARES Act. But as soon as that gets lifted, they can go right back to court and start the eviction. So right now they're protected from being evicted. Everyone is, because they can't file with the courts. But as soon as that gets lifted, it's game on. They can absolutely get evicted for not paying.
Game on. Any other questions?
Be a lot of overtime coming into play at that point. They're going to move quickly through the courts at that point. I mean, that's really what's going to happen, is that people are going to move fast to get things done quickly because there's a lot of catch up to be done.
I know, Soners, I hope I said your name right, Soners. What would you recommend to do with international clients who are living out of the USA but want to do a short sale?
So they want to buy a short sale, or they moved out internationally and they own a house in the US to do a short sale?
That's confusing, that's why.
I think the question is how can they transact internationally, which is somewhat, it's going to be complicated when it comes to closing documents. Outside of that, it's pretty much electronic, right? I mean,
right. I mean, it's just going to depend if they're the ones that have a house here because buying it is going to be a completely different answer. But if they have a house here and they've moved out of the country, the only, like you said, complication would be getting a notary from the embassy for documents that need to be notarized. So we've had to do that where people have moved.
Yeah, to be able to have a legal closing is really where the biggest hangup is going to be. We've actually done another call with the board, which that really is the biggest problem with. And we do a ton of foreign nationals in our market from Central Florida down. We do a ton of those short-term rentals, a lot of lending in that space. And, there's a lot of closings that really can't even occur right now because unless you can figure out an apostille situation or something like that. And most of these countries, Colombia, for example, you still can't. You can barely, it's women one day, men the next, women one day, men the next. So, those things are really going to keep things tied up. It's going to be more difficult.
Yeah. Hi, everyone. My name is Soner. I was the one who asked the question. Hi. Yes, right. I have a bunch of clients who own properties here in Miami, especially Miami Beach, North Miami Beach, in that area. It looks like 1, 2, 3 short sales are away. And that was the reason why I asked this question, because these clients are living out. One is living in Germany, the other one is living in Italy, and the other one is in Colombia, exactly. And and what I heard, they already fell behind with the mortgage payments since 3 months. Now somehow I have to deal. And do you think the selling bank will allow, or I start thinking about it, do they have to completely give me an attorney, power of attorney, or, this?
That was going to be my question to Nicole was, do
Yeah.
you think that you can get the banks to agree to, say they figured out how to get an apostille in their home to do that type of, where they can actually issue a power of attorney to transact on their behalf? Is that something you think that lenders would be willing to cooperate on, or is it really just by the servicer? It all depends. It's a case by case. You have to ask.
So as long as they're able to, because everything is electronic as far as providing their financials, if they have a US-based job, if they're behind, it means that they can't afford it, right? Otherwise they'd be paying it. So as long as we're able to prove that hardship and that relocation, it shouldn't be an issue at all.
So you think that a power of attorney in a situation of creating the capability of the closing itself would be accepted?
Oh, absolutely.
Or they would have, it would? Okay.
As long as the title company accepts it, the lender will.
Okay.
I have one more.
Yeah, perfect.
Thank you very much for the input. One more question. In the past, I had a couple of short sales in 2007, 2008, 2009. And what do you think about tenant occupied properties? Is it allowed? Do you think it will be still allowed? I think back then it was allowed that the buyer was allowed to take over the tenant. Do you think, what do you think about that?
Meaning the new buyer take over
the tenant, or do you think the bank will require the tenant to move out?
If they're doing so, if they're going through the making home affordable and they're getting relocation, they absolutely have to vacate the property. But because the tenant is not a borrower, they can always make arrangements. It just has to be disclosed to the bank.
Okay, so we need basically the bank,
like a standard contract, right? I mean, that's basically you're taking over my tenant. Here's your deposits, right? I mean, they have to transfer deposit, right? I think that would be the key.
Yep, absolutely.
Well, thank you all so much. I don't want to keep you on for too much longer. We've gone over it, but I really appreciate you being here for us. I am going to one more time put your contact information. If anybody's interested in joining Miami YPN Pro, please reach out to me and I'll help you out with that. And then there's all of Nicole's information. If you have additional questions, her email's there, her Instagram, a lot of content, and YouTube as well. And then she also has a Facebook page that she constantly is putting out resources on. So it'll be on there too. Anything, Nicole?
Okay. Nope. Thanks for having me. And like she said, the best way to reach us is going to, well, you can call us. You can also go to our website, which is the SS Queen. And I'll put that in the comments, thessqueen.com. And every week we are putting out videos on YouTube. So a lot of these, like the short sale process, like the most common questions, what to ask. I mean, there's so many videos on there for realtors specifically. So go to the channel, subscribe, and then let us know if you have any questions. Appreciate it.
Thank you, everyone.
Thank you.
Thanks, guys. Thanks for having me.